Okay, now we're recording. All right, so very good morning. Wonderful to have you guys. Happy summer. Everyone's summer's going good. We're seeing some good stories and details coming from everyone's summer. I'm glad to hear it. Summer is, I remember being a kid and thinking, I almost didn't like, big holidays like Christmas or birthdays or whatever, because there was so much anticipation and then it felt like it was over in a flash. I have since moved that feeling to summertime. Summer is just the best time of year, and then it just comes and it flies by in an instant. I feel like summer goes so quick all the time, and this summer, good heavens, this summer has just cruised by crazy fast. But it's been fun. I hope you guys are having fun. I'm having some fun as well, but it's just going too quickly. I was out of town most of this week, and part of last week we were in California catching up with all of our California side of things, and everything was good there. It was nice to you just got to mix up the routine a little bit, get out of town, go do something different for a couple of days. It's good for the mind and body and soul and all that. So hopefully you guys are doing a little bit of that. Even if you don't go somewhere far or crazy, just go somewhere and do something, do something fun. Go have a good time. So enjoy summer. It is going to fly by too quick. But while the summer is passing by fairly quickly, we're getting some pretty good movements. Summer trading is very much able to be very slow. Summer trading is able to be really, really boring and really slow and really nothing. We've had some pretty good summer trading. What do you guys think? Does it feel like the summer trading has been decent? I mean, I've seen some real slow summers where, in July in particular, and we are, I don't even know what the date is right now, but we're way past the halfway mark of July, and usually the month of July is just nothing going on, just nothing. You got to really hunt down those pairs to get good trades. And the slow one that we have, hey Mel, nice to see you. The slow mover that we have is, Euro dollar's a little slow and Aussie Swiss is a little slow. We're getting some great movement out of the CAD pairs. Our Aussie CAD trade is just screaming along, and it's awesome. Overall, I think that it is. Whoops! Oh my goodness. There we go. I think that we're just going to continue to see some good activity here. And I'm okay with that. I'm really okay with seeing some good movement here. First summer trading, Patty. Okay, yeah. Summer trading can just be real slow and real sideways and real, just boring in general. But we've seen some good stuff going on here. Namely, I'm real happy about this. Aussie CAD trade that we have. I don't know that we could have got too much of a better entry on this Aussie CAD than we have. Our lowest entry here, 91.15, and we saw lows here. Hold on one second. There we go. We saw lows back here of 90.75-ish, but that's pretty much. I think that's pretty much about it, right? Yeah, there's our 97.5. We got in at our entry at 91.15, right around this double bottom. I mean, that's a pretty fantastic entry there for the Aussie CAD. I mean, what a great little getting in at the bottom kind of scenario, and this thing is just running along. Now, I want to take the Aussie CAD to talk about a very common question. And a very common, scenario that we are all faced with as traders, right? And this is one I received 3 emails that I can think of this week about this. I don't know if any of the people that sent the emails are in here. Oh, so I think we're going to have some in here. But some people have been asking me, how do I know when to take profit? How do I know how to manage a winning trade, right? That's definitely been a question I've received a few times this week, and probably a few times every week, really. Especially people that are kind of joining the group for the first time and getting involved and so on. And I'll tell you a couple of things that I do to manage winning trades. And the Aussie CAD is a great case of just managing a winning trade. First off, the most easy, simple, straightforward answer is the following, right? Which is just follow my targets, right? Just use the targets that I'm suggesting. Aussie CAD, we've got a couple of targets, and even if we don't have a couple of targets, we are still in the trade, so we're just letting this trade run. Now, there's a couple of kind of caveats here about this whole thing. One thing is sometimes these trades are really slow, and you can jump out and jump back in, jump out, jump back in. Do that multiple times and really expand the number of pips that you're making, which is awesome. And a lot of the more successful members of the trade group, or most successful members of the trade group, however you want to put it, do that, right? They'll, if we're in one trade, they'll be in and out of that trade 5 or 10 times over the course of several days or even a couple of weeks, right? And they'll kind of maximize those pips. Like the Aussie Swiss is a perfect example. This is something that, you can just jump back in and out of and grab 10, 15, 20 pips every time because it's just going nowhere. Excuse me. So something like that, a really slow, just kind of historically slow pair, jump in and out, make a bunch of extra pips on it. But something that's moving well, I set profit targets. I tell everyone exactly where to get out or where I'm getting out. And while you're getting a good feel for your rhythm, if you decide you want to be the person that's in and out 50 times, that's great. But while you're getting your footing and you're getting a feel for things, just follow my profit targets. Because the biggest problem in trading is letting losers run too long and cutting off profit too soon, right? We don't really do that in the group. Sometimes we'll take an earlier profit than expected for various reasons that we'll discuss in a minute. But we don't just let losers run and run and run and then close off with profit really quick, right? That's not how we roll around here. So that being the case, just follow those profit targets. Just get out where I get out. It's real easy, straightforward. Now, if you're feeling like you're ready to, learn a few more things about it, here are a few of the aspects of why and where and how I get out of a trade. And I don't want to get too off track of things. I'll talk about this for 5 more minutes. We'll get back to some of our setups, but I think this will be important for, for a lot of people. This is a question I get, like I said, every week I get a couple of people asking about this, and it's such a good question that I feel like I need to spend a few minutes talking about it in the webinar here. But the problem I'm having with trade is as it moves up, I place stops with profit, having flexibility of when to get back in. So, Bo, this is exactly what I'm talking about here. So, here are things that I basically never do. Number one, I don't ever use a trailing stop, ever. I just don't. And maybe I have in the, no, I don't think I ever have in a group trade. And, I always kind of leave the possibility. I don't like to commit to anything too much, but, I don't use a trailing stop. When I do lock in profit, it depends on a couple of factors, right? I do like to lock in profit. I like to move my stop to somewhere that, if a trade is profitable. I mean, our Aussie CAD here, for example, our highest entry on the Aussie CAD is 91.65, and we're a nice little chunk of pips. We're about 70 pips above that. Right now, we're, 120 or so pips above our lowest entry. So, we can definitely move some stops in and start protecting some profit here. But when I protect profit, I usually like to protect, and there's kind of 2 scenarios. If I'm getting anxious to get out of the trade, which I might be kind of anxious to get out of this Aussie CAD, I'm getting more anxious to get out of it now that it's starting to hit these targets and it's starting to make these moves and it's leaving some lower areas that I think it might start to want to come back to, right? And that's kind of part of the decision process. This is running up. It hit this monthly pivot that we were waiting for right around 92.30. It broke this nice little resistance, and so I'm saying, okay, that looks good. Hit our monthly pivot, that looks good. But the thing that kind of gets me wondering is we're starting to create these little market imbalances in here. We've got some little guys kind of lurking through there. And so as I see more and more targets add up below, I get more and more anxious to get out of the trade, right? And that's kind of how the decision process goes. I trust in our targets so incredibly much, right? These are all great targets. And guess, I have said this 1,000 times, and I'll say it 1,000 more times. These targets are going to get hit, right? This weekly pivot is going to get hit. That monthly pivot, oh yeah, that's connected to that little daily. So the monthly pivot is missed. That market imbalance is going to get hit. That market imbalance is going to get hit. Weekly pivot will get hit, so on and so on. The question is, do we want to be in the trade or not, right? Do we want to be in the trade when it hits that, that area? And the answer, I think, to that question is yes, we do want to be in the trade. But as this works its way up, it depends on how it moves higher. If it moves higher aggressively and leaves a lot of targets and missed areas below, I start getting out and looking for re-entries on pullbacks, right? Now, the Aussie CAD, I wouldn't say has aggressively moved higher. It has left a weekly pivot and a daily pivot. Here's another daily pivot here. And, and these market imbalances are starting to kind of stack up here a little bit. It's been a fairly sustained movement, but it is leaving missed targets. And the more missed targets it leaves, the more likely we need to get out of this sooner than later so that we can, preserve the majority of our profit. So we're working on these market imbalances kind of all over the place, right? So I'm getting anxious-er, if that's a word, to get out of this trade. It's on my mind a little bit more every pip that it goes higher, because we're now getting, this culmination of lower targets. So that's how I usually determine how to get out of a trade. How is it moving towards my targets, number one, and what targets is it leaving down below and imbalances down below, number two. And so the less targets it's leaving down below, the longer I will stay in a trade going up. The more targets it's leaving down below, the less time I will stay in a trade moving higher, because I know that this is getting increasingly imbalanced down here, and that the market is going to start making its way back down to start hitting those levels. Does that make sense? Feels like I might have just strung a bunch of words together that were not English. You guys with me on that? Does that make sense? Does that register a little bit? Would a trailing stop be so bad now if it's in mega profit? Following up is it wants to go. Bo, I think trailing stops are more preference, right? I hate trailing stops because I feel like they don't work consistently, and I feel like I'm constantly getting taken out of trades too soon. So I just don't use a trailing stop. It's not that they're terrible to use. I just don't like them personally. In this case right here on the Aussie CAD, I think locking in profit will be, just moving a fixed stop to a certain area will be kind of the better option. Now, the other thing to talk about, speaking of moving stops and protecting profit and so on, I will protect more profit if my goal is to get out of the trade sooner. Like Aussie CAD, like I said, I'm getting more anxious on Aussie CAD to get out because it is, for the reasons we've talked about, right? So I'm starting to think to myself, yeah, I'd be okay getting out of Aussie CAD sooner than later. So with that attitude, again, we've got missed targets down below and it's hitting our targets up above. With that attitude, I'm going to be locking in more profit, like our 91.15, and I'm going to send out some details about this after the webinar is over. I want to look over some levels a little bit more closely, but we're going to lock in some profit on this Aussie CAD, and like our 91.15 entry, I'm probably going to move that. I'm probably going to move the stop on that up a lot, right? I'm probably going to lock in like 70 or 80% of the profit on that lower entry. Might move my stop on that one up to 91.90, 9200 area. And because I don't want that to pull back, and I don't want that to eat into my profit too much. On the second entry, may lock in a pretty big chunk as well, right? So the more anxious I am to get out of a trade, the more profit I will protect. 70–80% of profit if I'm anxious to get out of the trade, right? If I want to let the trade run, but I just don't want a bad scenario, I don't want a profitable trade to run to loss and become negative, then I will lock in less profit. So if I'm up 50 pips on a trade, I may only lock in 5 pips just to say, hey, all I care about doing here is protecting my profit and paying for the trade itself. Any carry, rollover, swap that I got to pay, commissions, anything like that, right? So then I'll just lock in kind of the smallest amount of profit because I want to give it the most amount of room to run. If it's in good profit and I'm just really saying, hey, we might be running on fumes here, we could be seeing this thing starting to poop out, then I'm going to lock in a big chunk of profit. Okay. Do you keep your third entry at like +1 or more? Yeah, I mean, it depends. It depends, but yes, yeah, you can. You got, multiple entries. It's never a bad idea to kind of protect, right? And make sure, the last thing you want to do is be in a trade 3 or 4 or 5 times and then have the market go against you. So if you're really piling on the trades, I mean, we're only in 2 positions on Aussie CAD, but if you're really piling on the trades, yes, start locking in quickly on some of those positions. Because one thing that we always have to be prepared for in the market is everything and anything, right? And so if you got a lot of entries, the last thing you'd want to have happen is have 5 entries or 3 or 4 or whatever all go negative, right? So yeah, the more entries you have, the more aggressively I would lock in some amount of profit on some or all of those entries as quickly as possible. Okay, questions, comments? You guys feel okay about that? What do you think? What do you all think? Oh, man. I had to watch the season finale of Stranger Things 3 last night, and it kept me up a little too late. So that might show my age. I swear I'm not 16, but Stranger Things is great. Okay, good. Seems clear. Good. Ewan, glad to see you, my friend. And Art, okay, helpful. Very good. I like helpful. Helpful's good. Good. Thanks, Mel. All right. So I just want to make sure everyone's clear on that. That is, pretty important little situation. Good, Patty. Good people. Yeah, it's such a great show. Okay, so the guys who are in and out several times, do they get out at pivots or other targets? Yeah, so James, yeah, that's often the case. Exiting at pivot points, exiting at support or resistance levels. But a lot of it is also, how is a pair moving? So our Aussie CAD, for example, has been a pretty steady mover. I mean, in hindsight, yes, great opportunities to say, hey, trade all around these levels, but this has been a pretty steady run up. Something like this, we can just say, well, Aussie Swiss has a pretty slow range right here. Excuse me, seems to be having a hard time really making much of a move above 90 or 69.50. And so, that being the case, we can just kind of find the range and sell at the upper and buy at some of the lower areas and so on. But yeah, I mean, it's pivot points. It's, but James, don't stress yourself with that too much yet. Just get a good feel for the movements. Remember, and especially since you're not in the U.S., you wouldn't have the issue anyway. But and with a little more leverage and so on, you can always just follow our trades to the T, so to speak, and then put accompanying trades on. And I recommend this to everybody. Put some additional trades on, maybe even at very, very small sizes in the beginning, maybe only 10 cents a pip, right? To go along with our existing trade. So say you're in an existing trade at 2 or 3 or 5 or 10 or $20 a pip, whatever it may be. And then just put an additional trade on where you say, I'm going to have this trade, and maybe you have 2 accounts, I don't know, however you want to do it. But say this trade is the group trade, and I'm going to follow it exactly how the group follows it and recommends it. And then this trade is going to be the one that I'm going to kind of do a little bit of experimenting within the parameters of what we're discussing, right? You know, use pivot points and get in and out at support and resistance levels and just kind of see what you can do there. And in the end, see what the results are and how it's working out for you. And you'll start to kind of hone and work through, you know, a way to manage those positions and do additional positions outside of what we're recommending in the group. Does that make sense? That sound okay? Good, good, good. All right. Okay, so any questions about the Aussie CAD, profit taking, any of that stuff? Like I said, I'm probably wanting to get out of this sooner than later. It's making a nice little run, but it is feeling a little bit on the extended side. We're working on a little bit of a channel here that I want to just keep my eye on here and see how this thing plays out. You can see that it's right at the top of that channel, right? So we've, you know, it's broken out here, but it's right at the top of this channel, which it has tested previously. Pretty well established channel here. We got all those levels in there, and then obviously it's, you know, hit here and so on. So at the top of that channel, the Aussie CAD might be coming into a take a breath area here. So, you know, I don't know. I'm going to watch it a little bit this morning. We might take an early exit. We might, you know, really protect a large chunk of profit. We'll see how it goes. Okay, everyone good? Good. Okay, so that's our Aussie CAD. We've got 2 entries, 91.65, 91.15, and so on. Anybody that is in both the scanner group and the premium group here will know that we have 2 Aussie CAD trades as well. I rarely overlap trades and have the same trade in both groups. It happens, you know, every 20 or 30 trades maybe. But we have slightly different entries in that one. All pretty overall similar stuff. And so, yeah, if you find yourself in one or the other, fine. You know, just they're fairly similar. Yeah. Anyway, that's that. Okay. So Aussie CAD looks good. Everything's looking good there. Aussie Swiss, this thing is just slow and ridiculous. We can't seem to, it's not going against us enough to fill that second entry, and it's not going for us enough to get out of the trade with enough profit to make it worth our time. So good grief, this thing has been stuck. It has just been stuck and stuck. We got pretty close to getting filled on that 68.45 entry that we had, and then it didn't. And it's just really hopping around. I think where did I talk about this? Talk about this to somebody somewhere for something. I can't remember. Anyway, the Aussie Swiss is, you know, we're just staying in it. It's just slow and boring, but it's staying in profit. It's staying kind of in our favor. So I'm just letting it run. What can I do? What can I do? I'm just letting it run, and if it dips down enough to fill our trade, excellent. If it doesn't, at some point in the near future, we will get this running into a good spot. So Aussie Swiss, we still have a pending order and a filled order. Remember, I deleted the New Zealand Swiss trade out of here. It never filled. I let it sit for about a week as a canceled order, so everybody had plenty of time to look at that. So that's now gone. And then we've got this euro dollar, which was looking so good, and then it started looking so bad, and I think it's kind of looking so good again, and then it's just all over the place. So anyways, we've got the euro dollar, big description here on kind of all the details on euro dollar, but we've got 2 entries on euro dollar. 2 entries. So 113.20, 112.35. And, you know, and here we go. It's just kind of range bound. The euro is just real slow most of the time, and the dollar's kind of slow as well. And I think if we can clear out this, you know, 112.80, 11300 area, we're going to be in business for, you know, a nice little run up. And I'm just kind of holding on to that, hanging in there. I would much rather be in the euro dollar for the first time at 112.35 and a second time more around 111.50. you can't have it all, so so that's kind of how the trade's looking. But I still like it. I think it's a good trade. The thing that I think is less likely to happen is that the euro dollar is going to kind of run away, and go nuts on us, right? It might break out, and this is at a little bit of a decision point, right? It's having a hard time getting above this resistance. That's kind of really where our trend line and our triangle is right here. So it's having a hard time getting above here. If it does get above there, I think we're in business for a nice move above about 112.80. And it might break out here, right? It could break this trend line that goes back a couple of months. It could break that trend line. If it does, I don't totally anticipate a massive sell-off and adios to the euro dollar. There's not a lot of follow through in either direction, and that's kind of comforting in these kinds of scenarios, right? There's a lot of range-bound trading, and I could see the euro dollar kind of, working its way down to this kind of stuff, right? Jump down maybe 111.80, 111.50, and then work its way back up. So euro dollar, I don't like a ton to take third and fourth entries, but I could see us taking a third entry on the euro dollar and kind of just doing that, right? So third entry on euro dollar, maybe down in the 111s, 111.80, 111.50, something like that. So that if this is kind of stuck in this range of, in the 111s to the 113s, we can get out with some decent profit. I think the euro dollar's got a great opportunity to make a massive, great push higher. It's just so slow, so slow. And there's a lot of factors. I mean, the central banks are really diving in, and the U.S. is really talking about, maybe they're going to have massive rate cuts, right? Big time. Or maybe, maybe not. And that's going to be the big surprising factor. The Eurozone's doing the same thing. They're talking about cutting rates more. And so, so we're kind of working with the two big currencies here, Euro and USD, and they're both kind of trying to outdo one another for weakness. And so we get a lot of sideways activity here, but I'll stay in this thing hopefully until the 11300, 113, mid 113s area, and then reassess, right? If it looks like it's doing well and it's picking up some good momentum, then great. We'll sit the trade a little bit longer and we'll let it run up into some of these areas. Otherwise, we might just close it out with a meager profit and let it give us some better confirmation. But either way, I'm okay being in the trade. I'm happy about it, and we'll let it rock and roll. Okay, third buy for 111.50. It sounds good, Bo. I think that's a good area. Good area. Great. Okay, so those are kind of the three trades that we're in right now, the three trades that we're trying to just, let play out and hopefully give us some good dollar bills. And I think they will. I think we should have some nice opportunities coming out of all those guys. Hi, Joe. Nice to see you, my friend. I do have thoughts about New Zealand dollar and Aussie dollar and New Zealand yen, and we're going to talk about all those as well. We didn't have a Monday webinar, and in fact, I couldn't even get a video posted despite my best efforts. And I wanted to talk about those. I wouldn't say we missed any opportunities this week necessarily. I mean, maybe there's some short-term stuff there, but we didn't really miss any big stuff this week, but we did, I did watch, and I think we have some interesting things in the works. Here's what I want to see on things like the Aussie dollar and the New Zealand dollar. They're both super similar, right? Aussie dollar, big market imbalance, miss pivot. It's actually not a miss pivot anymore. And miss pivot, and another nice little market imbalance right here. I guess we could probably say that's a bit of a market imbalance right there, which is similar to the Aussie CAD. So, looking at this, I would say, we've got some levels, and I want to buy dips on Aussie dollar, like a lot. Like I'm real excited about getting into the Aussie dollar. And, you know, we're still coming off this massive, massive, beautiful lower level. Everything's just looking great. It's just starting to pick up momentum. We're just going to ride these Aussie pairs up like crazy. Now, it is coming into contact with the 200 moving average. It's going to be a big resistance point. It's a great area for this Aussie dollar to turn around and head lower. We've got all those imbalances, targets, all that stuff down there that is going to attract a movement lower, and we've got that 200 EMA that's going to, you know, be a pretty good amount of resistance and probably push it lower for the short term. So I'm anxious to just see this hit market imbalance, hit pivot, hit market imbalance and pivots down here. I'll start scaling into this trade somewhere below 7,000, probably somewhere in the 69.75-ish area. I want to see a dip, maybe just less than 100 pips, right? But I want to see it dip. I got to see this thing dippity-doo-dah to get in. It looks great for the bullish, but short term, we're running into some pretty intense resistance, and I think it's going to be a good little point for this to kind of start taking a breather. So that's Aussie dollar. We're going to be buying this thing hopefully this coming week somewhere in here. The New Zealand dollar is very similar to the Aussie dollar. I like Aussie dollar a lot. I think the Aussie dollar is a better setup than New Zealand dollar, just setup-wise. But I think the New Zealand dollar itself, New Zealand's showing a lot of strength. And so I like that aspect of the New Zealand dollar. Aussie dollar is showing a lot of strength as well. Across the board, it's pretty solid. We've got a pretty nice little aggressive move up there on Australia versus US. New Zealand dollar, same thing, you know, an even stronger movement. I like the setup on the Aussie dollar because we're really grinding around that big time low. We didn't really get a full double bottom here on the New Zealand dollar, which was kind of, you know, a bummer a little bit. But nice little support down here, and then we've got that bigger support down there. So, you know, I like the actual setup on the Aussie dollar just a hair more than New Zealand dollar. But New Zealand dollar, same kind of situation. Big market imbalance down here. You know, a little bit of a market imbalance kind of lurking through this little area here. You know, a couple of missed pivots throughout this area. So, again, I would just like to see this thing take a little breather, give us a little breakout, and start to kind of work its way back, right? So that's what I'm looking for on the New Zealand dollar. Let's see how this little channel behaves. I love channels. They're just my favorite, as one of my grandmas used to say. So these channels are really, really good. This hasn't really been pounding on the top of the channel so much. If we can get this just kind of giving us a little bit of a break, we can start to kind of rebalance some of that movement down below and hopefully get a nice little push back up. So being long New Zealand dollar, I love it. I want to see a little bit of pullback before that happens. Does that answer your question, Joe? Does that make sense to everyone? You guys with me on Aussie dollar, New Zealand dollar kind of situations? Everyone feeling good about that? I think we're staring at slow, steady turns on all of these pairs, and I think we have massive long-term trends starting out. I'm really excited about that. I like real big long-term trends because they're just so much fun. Okay, so all right, your long New Zealand dollar. Adrian, your video popped up. Good to put a face to the name. Nice to see you, my friend. Hello, hello. I'll turn your video off, but it's not because I don't want to see you. Good to see you. I always love when people's video accidentally turns on because it's nice to see people. It's always nice to see people. Sometimes this gets a little bit faceless, and so it's always good to see people. Welcome, Adrian. Happy to have you with us. Okay, so we've got all of this. We've got all of these setups in the works. We've got some great things that are happening. New Zealand dollar, Aussie dollar look just super awesome. Our Aussie CAD trade is just doing great. Surprise, surprise, it's coming off the top of that channel. Not surprised at all, actually. We'll talk about kind of what we can do and what we should do and how we should kind of work and manage that whole situation. and so on. So Aussie dollar, New Zealand dollar looks good. Speaking of Aussie dollar and New Zealand dollar, we have the Aussie New Zealand, which I'm excited about. Just to kind of clarify here, Aussie New Zealand, we talked about let's get long this thing down as low as possible. I really, really, really liked 10400, and I still really like 10400. I think it's a great, great little area. 10400 is right there. We tapped it just barely. We still have on the Aussie New Zealand, we still have an untouched monthly pivot here that's at 103.85. Probably right in that area. I'm going to start scaling into this thing. 103.80, 103.30, 10300. I just pretty much anything below 10400, I'm going to start scaling into Aussie New Zealand. So I just think we can get a little tiny bit closer to that monthly pivot and that market imbalance. But if we scale in below 10300 and this thing goes down to 10300, I would have a hard time seeing the Aussie New Zealand go anything below 10300 now. That's pretty solid support there, and this is summertime, and we're probably not going to exceed those levels. So I like to get into these trades with. Hold on, I got a sneeze. It's thinking about. Okay, there we go. It's gone. We like to get into these levels or into these trades about 1 to 200 pips from these real good levels. We are 120, 30 pips from this nice little support zone right here, which is right about 102.80, 10300. Then we've got this big guy down here at parity, and that's the real mother down there. So. But I have a pretty strong feeling, some pretty heavy confidence that we're going to kind of hold this 103, 103, 107 max upper area for the next couple of months. So anything we get down here on Aussie dollar around 103.50, 103.75, I'm going to be jumping into this thing like crazy. So I really like Aussie New Zealand long, like a lot. I think it's going to be a great little trade. So that's going to be something coming up. New Zealand CAD, yeah, I've been working with New Zealand CAD a little bit, Bo. I like that one. It needs to pull back a lot. We had a nice little bar count and a scanner group trade at 8,700 on that. That was a nice little trade for the scanner group. We made some good pips on that thing. Now that kind of the bar count is out of the way and the scanner setup is out of the way, I do like this, but it's absolutely not at an entry point right now. So this one is kind of sitting here, and it's kind of lurking, and it's kind of doing all these things. New Zealand CAD is, this is where we don't take entries, right? Coming up into resistance from the 200 EMA. It's a good little distance off this support right here, right? So lots of support down in that 86, 87, and here it is up at 80, 88.50. Great targets up here. This thing needs to pull back a good little bit before I get even remotely interested at jumping back in. But I do think that we could have a good trade here coming up for the group. But we've got quite a few targets down below here, right? Same kind of situation as so many of these other things that we've looked at this morning. Short-term channel running like a champ. Longer term, we're kind of getting these hits here, and we're coming into the top of that channel. Let's see if this thing can take a breather. The thing that I want everybody to always remember is, for example, New Zealand CAD. If you're not in this trade and you're thinking, this thing's running like crazy, I got to get into it. This would definitely not be a time to get in, right? We've got to get this thing down here and hitting some of these lower levels. Maybe it doesn't make it all the way back to the weekly pivot right now, but that's something we have to kind of anticipate and look for that kind of a movement there. So that is that's what I would say on this guy. So absolutely, we'll be watching it. We'll be waiting for some dips, and we'll be anxious to enter on those dips. Right now, we see a lot of Canadian weakness. We're seeing a lot of New Zealand strength. And guess what's going to happen? That will shift. Overall, the big picture probably won't change much, but the short-term picture will change, and we'll see some New Zealand weakness and some CAD strength, and that's going to drive this pair down and give us a great opportunity to kind of buy that dip and, you know, just get kind of the ideal entry. Bo, where's a good target on New Zealand CAD? I mean, it's hitting the top of the channel. I'm out of New Zealand CAD now, so I don't know. I mean, you know, watch this kind of resistance zone right here, I'd say. There's some, you know, some heavy levels going through about 8,900. I'd say that's probably a good spot to look for. We have big, great, beautiful targets up here at the 9,000 area, but I don't know if it's going to make it there before it pulls back a little bit. So maybe a shorter term target would be that 8,900 area. Chris, Euro New Zealand sitting at 630 bars on 15-minute chart, long way from double bottom on daily. Yeah, that's a good one. That is a good one. So New Zealand, Euro New Zealand is one that I typically don't trade, I don't touch, I don't like, because it's so nuts. But yes, we do have, you know, we do have a nice little scanner trade there. It's on the 15-minute chart, the numbers are off the charts. On the 30-minute, I think we even have a pretty great bar count on this 30-minute here, 300 and change. But yes, you know, here's a nice little channel to watch. I think as it breaks out of this channel, that could be a good opportunity to, you know, to possibly get long Euro New Zealand and trade it up. But you're exactly right. We've got, you know, we've got big support levels. Let's go one more out here, weekly chart. We've got some big support levels down around 163.50. We'll say 163.50. It's about 200 pips lower than where it currently is. Now, there's some big bearish candles here on the daily. And I do like, you know, you guys have heard me say this a bunch of times. I do like this, right? 1, 2, 3, 4, 5, 6, 7, 8 bearish daily candles. So I always like to kind of peek at a currency pair and say, okay, how many in the past, how many bullish and how many bearish candles has it had? We have a good bar count on something like this. We've got a pretty high number of consecutive bearish candles. You know, something like this, you know, if we go back and look at past movements, that's a pretty intense bearish movement. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You know, buckle up. It's going to probably be a wild ride. How many, you know, how many bullish, how many bearish candles do we have? What kind of behavior can, you know, the currency pair at hand give us? Euro New Zealand is violent. I mean, this is like just the most wild of the wild. So this one's a crazy mover. It's a crazy mover, and so this is something we would let just get overextended, really get down to those levels, you know, give us maybe another 2 or 3 or even 4 bearish daily candles, and then at that point it's probably safe to start jumping into it. So I'll probably, you know, I'll update you guys on this as it goes, but she ain't ready yet. So, and, you know, and this kind of goes back to things we've talked about in the group before. Trading super high volatility pairs versus trading the lower volatility pairs. And lower volatility pairs are going to give us less trouble and still more, you know, and still good money. We'll make less profit, but with less trouble. And less trouble is good. You know, and that's how it is in all aspects of trading, right? If you're trading options, if you're trading, you know, stocks, if you're trading currencies, if you're trading anything, you know, with less risk, you get paid less. With more risk, you get paid more. But oftentimes the risk is so much heavier that the extra payment isn't worth it. And for me, that's kind of Euro New Zealand. There's, you know, if you get on the right side of this thing, it can move 500 pips really quick. But if you're not on the right side of it, it can move painfully, horribly, right? And it can cost you 500 pips. So kind of how we look at it. Yeah, it's possible, Bo, but I would do what I'm saying to do, which is wait, you know, wait for it to get down there further into that 163.50-ish area, maybe 164.00, and then start looking for entries, you know, down at that level. You could trade a breakout, but Yeah, I just be pretty careful there. Euro Aussie is calmer than Euro New Zealand. I don't know that anything really compares to Euro New Zealand. It's such a wild animal. Which is funny because the Euro itself is very calm and the New Zealand itself is pretty calm. But you put the two together and it's like, it's an unhealthy marriage, let's just say. So yeah, Euro Aussie. We had some great trades on Euro Aussie this year and last little bit, and it's just Euro Aussie has just done exactly what we knew it would do, which is come off of these big, massive levels and just come cratering down. Nice head and shoulders pattern here, working its way into that big lower fantastic target. Great big targets to come though, so Euro Aussie might have some more entry potential coming up there, but yep, pretty similar. Okay, so we're waiting on a little bit of retracement. We're sitting in some trades. We're liking Aussie CAD a lot. We're liking our Aussie Swiss enough. We're liking that Euro dollar enough as well. I think everything's kind of looking good enough on those guys, and I'll have some updates on on what might happen, what might be in the works on all of these as we go. Any other pairs you guys want to bring up? Any questions? Anything? Good comments, guys. Good interactions today. It's all very good stuff. Glad to answer your questions and talk about what you guys want to talk about. It's really, really good stuff. Yeah, EuroCAD actually, thanks for bringing that one up. EuroCAD has been on my mind a little bit. I really do like the EuroCAD when it feels like behaving itself. We've got a lot of CAD weakness and a lot of Euro weakness right now, so that's kind of why it's been a little bit on the back burner. But here's what I'm looking at / looking for on EuroCAD is I'm watching. This is a big decision point right here, right where it's sitting, basically about 146. 146.50-ish is a pretty big decision point right there. It's a nice, long-term trend line. Did we take a trade on the Euro? I feel like we took a trade on EuroCAD. Have we recently taken a trade on EuroCAD? Feels like we have. Maybe I made that up in my head. Maybe I did it in the other group. I can't remember. But anyway, maybe we haven't. Maybe I'm making stuff up. I like the EuroCAD. I think that's a great little spot right there, right? That's a great little decision point right where it's standing. I would like to see if we can get this a little bit further. We have a really, really solid level down there at 145.00. We're here at 146.80. For this to make one more push lower would not be too out of the question. So I could see that happening. And if it does, I'm pretty anxious to buy it there because then we could have a great invalidation point at that 145.00. If we bought that dip and it broke out and said, I'm really looking to make that big push in some of these lower levels, and we close it out. We take a loss. This would be one I would use a stop loss on. But that's a pretty good little support zone. It's a couple of years old. It goes all the way back into March or so of 2017. It's a nice little spot that I like. So one more push lower, and I'd feel real good about this trade. But it has a lot of great targets. Market imbalance right there. Daily pivot, weekly pivot, daily pivot, monthly pivot, daily pivot up here. And so maybe if it starts to work its way up above some of this resistance right here, and some of this little area right through here, we can start kind of getting back above that 147. It might be interesting to at least take up to that market imbalance 147.85. So yeah, buy order 145. Watch that closely and carefully, but I think that's a decent thing to do for sure. And maybe above 147, it gets a good push into 148 basically. So yeah. I like it. We have some great trades to follow up on and follow through on going into next week. So we'll be ready for those. We'll absolutely be ready for those. Yeah. Okay, good stuff. What else, guys? What else? Anything else? Everyone feel complete and whole? Make sure not to forget about that one. Breaking higher. So, good. Okay, so that's it for me. That's all I got this morning, but I think we had a great webinar. Anybody that joined us in, say, the last 30 minutes, if you've joined us in the last 30 minutes, make sure you go back and watch the beginning of this webinar, because we talk about managing profits, managing trades. So go back and, the recording will be posted in the next 20 or so minutes. Go back and review that, because that's going to be good stuff. Hey, Norbert, good to see you, my friend. We are bearish USD. Could USD yen be a good trade? Yeah, that's a good question. It's a good comment. I do like the yen, a few of the yen trades. Here's kind of just my thing about this dollar yen is, while it sits in this middle of the channel, I mean, on the bearish side, yes, we could, try to sell it and trade it lower. And that's possible. I don't know what entry I would try to take or how I'd try to do that. For me, the better entry would just be to let this dip down another, 200 pips probably, and start looking at opportunities to, maybe scale into that. I'd rather kind of get long. I prefer massive yen weakness over, I can't think of a yen pair that I want to trade yen strength right now. So even with USD bearishness, I would still rather buy a dip on dollar yen. So I think the yen will be even weaker than the USD. And so I'll just kind of trade the setup. But I don't really trade dollar yen too much. There has to be a bit of a perfect storm, and I don't think we have that on dollar yen. I think we have much better opportunities trading something like long New Zealand yen, long Aussie yen, long, I don't know, CAD yen. You could maybe trade that one short, I guess. I don't know, but again, it's kind of CAD yen and dollar yen are kind of in that same boat where I'm like, I don't want to trade CAD strength right now, but I kind of don't want to trade yen strength either. So I would stick with something like, Aussie yen and these nice little dips and this great little, head and shoulders pattern that we have. New Zealand yen looks just clean and wonderful and fantastic, and I'm just waiting for a good entry on this one. I think these are much better yen trades to take than dollar yen, CAD yen. Yeah, George. So yeah, I think CAD yen's not good, and I think dollar yen, is just, it's too middle of the channel. We already have the Aussie Swiss of my doing, which was, which is just sitting sideways. And I have a feeling, a CAD yen trade, a dollar yen trade would just go sideways as well. It would just kind of sit in it as it did, nothing. So I do like the yen trades, but I prefer New Zealand yen, Aussie yen over CAD yen, dollar yen. Does that make sense? Not trying to shoot anybody's trades down. I've been watching them closely, and I just don't know if I see enough movement there to kind of, merit a good entry on that. Does that make sense? Is that kind of, there is a couple hundred pips to go to the downside, but it's just so much chop that I don't know that going to easily get there without causing us, some amount of discomfort. But it's just my opinion. I have never been much of a dollar yen trader myself. I don't know why. I know people that just love the dollar yen and only trade the dollar yen, and I just haven't done it as much. So yeah. What else, guys? Anything else? Any final thoughts before we go head first into this weekend? What are we doing this weekend? What's everyone got going on? I'm kind of recovering from my week away, but hopefully you guys have some good stuff in the works. Mark, what is your thought on leverage levels? What do you mean by leverage levels, Mark? I definitely want to answer your question. Sounds like a good one. Just give me a little bit more on leverage levels. Are you talking about like how much leverage you have, like your leverage percentage, like your account stuff? If that's what you're talking about, I will happily discuss that real quick because that's super important. So if you, and I could be getting your question wrong, so please don't stop, or please correct me if I'm missing this here. Margin levels, is that what we're talking about? Ideal percentage. Okay, yeah. So your margin levels, like your margin level percentage, if you're using MetaTrader, I tell everybody, try to keep that around 1,000%. You can give or take a little bit there. If you're at 700 or 800%, that's okay, and anything higher is always great as well. But 1,000% is kind of that ideal spot to be in. If you look at your MetaTrader right now and you see that your margin percentage, or excuse me, your margin level percentage is at 200 or 300, you're using up too much of your account. You're too heavily leveraged, and you're going to get in trouble, with any kind of unexpected movement in the market. So try to keep it in the high hundreds as much as possible, or right around 1,000. So that is super, super important. Keep that margin percentage around 1,000. I try to keep mine above 1,000 as much as possible. I'm currently at 1,300 and change. I've got several open positions like all the rest of us. So I'm about 1,300 on my percentage levels right now. So that's a good one, because, the lower those levels get, we start getting in the low couple of hundreds, 200, 300. It means we're using up too much of our account, and we're going to get smashed if the market doesn't behave perfectly. So we don't want that. Does that make sense? Does that answer your question? It's a really, really good question. I'm glad you asked it. Does that help clarify everything for you there? Great. Excellent. Thanks for asking that. Very, very good. Okay, guys, anything else? Any other thoughts, questions? Yes, agreed, Mel, agreed. Very, very good question. And yeah, I'm glad I will talk about, money management and risk management just more than anybody ever. It's just my favorite topic. I always tell people, one of the big reasons that a lot of people got into trading Forex is because, hey, you can start with a $500 account, and with all the leverage we have, you could potentially make $10,000 on that $500 account. And I have seen people do that. I've made a lot of money on $500 accounts myself. A lot of people in the group have done that. But that's just not realistic trading, right? We need to, to be a real trader here, you gotta have a decent amount of money, and you gotta use a small amount of that money, and you gotta make consistent returns on that money. That's the only way to survive this game. That's why most people lose all their money and quit and go away, because they trade too heavily. They want to make too much. They want action, want activity, all that stuff. And it's just not how it works. I get that there's different trading styles for different people. And I also get that, there are things that will always kill a trading account. And that's that stuff. Looking for too many trades, looking for, trading too large of sizes, trying to make too much money from an individual trade. Just never. I've seen the movie play out too many times, and it's never a happy ending. What about when you open a new trading account? What leverage percentage do you use? So when you open a new trading account, if your broker says, hey, we'll give you 5,000% leverage, or, I think probably the highest, well, I don't know, there's some 800s out there, but I think the highest is probably 400, 400 to 1, 200 to 1. You can use any leverage you want. You can use, if they offer 10,000 to 1 leverage, take it, because it's not going to matter. It won't change the trade size that we use, right? Because no matter what your leverage is, you're still going to have a certain dollar amount that you're going to make or risk for every pip. And that certain dollar amount is fixed to our account size, right? So if you have $10,000 in your account and you have the highest leverage imaginable, we still don't want to lose, more than a certain dollar amount, more than, a couple of percent on a trade. So no matter what your leverage is, that won't change that trade size. Now, having more leverage can be good, because you can, maybe have more trades running at more at any given time, but we're, still it won't change really the trade size that we use. So the US went, 50 to 1, and I think the UK is probably pretty similar now as well. UK, Europe with the ESMA stuff. I think it's I think a lot of it's 50 to 1 and so on. And I think that's good, because it, kind of keeps us keeps us in a good sweet spot for our accounts. Good stuff, guys. Very good stuff. I love it. Great stuff. I love these live webinars. You guys are, just good participants, good questions, good comments. Very good stuff. Okay, is the leverage different with Trading View using Oanda? Nope. It's broker specific. It's not even broker specific. It's a US law. So it doesn't matter what feed it's going through, the leverage will always be the same. Any broker operating in the US has to have 50-to-1 leverage or less. So yeah. Okay, good stuff, guys. Excellent. Have a wonderful Friday. Have a fantastic weekend. We'll be back here Monday morning for the live webinar. I was camping on the beach last Monday, this Monday of this week, and just thought, do I want to try to like sit on the sand at 6 o'clock in the morning and do the webinar, or be in my motorhome and wake everyone up doing the webinar? And I thought, I just don't. I just do not. So that's why we just didn't have a webinar on Monday. It's pretty rare that I miss a webinar, but I just thought, you know what, darn it, I'm just not going to do it. This is summer. It's time for everyone to go on a little bit of vacation. I will do the same. I'm going to be in Thailand in a couple of weeks, so I will be like 90% out of contact for a week, which is pretty rare. But I will be always updating trades and keeping an eye on things. And after that, it's it's kind of back to the grind. So yeah, sand is no good for laptops. That is for sure. That is for sure. All right, thanks you guys. Thanks Mel and Chris and Mark and James and everyone. These are great questions. Bo, Adrian, good to see you, my friend. George, yep. I'll make sure to throw you back there in the chat. Make sure everything's working there. Ewan, good to see you. Happy to have you on with us. Norbert, great to see you, my friend. Capitals are good. Capitals are all good. Patty, nice to see you. Have a great weekend, you guys. Have a wonderful Friday, Saturday, Sunday. Looking forward to seeing you guys back here on a Monday. Thanks, Jim. Have a good weekend as well, my friend. Good luck on everything. Good luck, you guys. Take care. We'll see you soon.